Okay, so memory storage stocks and data storage stocks are some of the hottest stocks in the entire stock market right now, and they're really hot all while the QQQs have been really struggling to get out of this range and constantly bouncing into this support, as we can see 4-5 times now. And yet, if I jump over to WDC, we can see that it is riding its 10-day moving average like very strong stocks do, and on the weekly chart, it practically looks vertical like strong stocks do. And a lot of that has to do with how important these stocks are to AI and the progress of AI. Now, as you know, on this channel, we only speak about hot stocks from hot sectors. So if you haven't already subscribed, go ahead and do so, and even consider hitting that like button. And you will always know where the sector is rotating next. Now, if we also take a look at SNDK, you can see that it's mostly about the same picture. On the weekly chart, we have multiple green candles after this beautiful textbook breakout coming out of a key level. Key level breakouts are extremely high probability trades when happening on a leading stock from a leading sector, and that's just because they always break out without much of a fuss. We have something that's uptrending with the moving averages and from a hot sector. I'm afraid that's just a really good recipe. Switching over to the daily chart, we can see that SNDK has pulled in and is getting tight around this level, and I have this level marked here because it is the exact close level in the post market after earnings. This was the level that it closed at, and it seems that it is going through price acceptance, and it looks really good because we are tightening on a decrease in volume and we have moving average support. There are many who have considered shorting SNDK from this level. However, what I see is a very strong stock pulling back and tightening with moving average support. And so far, every pullback has led to a continuation. Here with an even deeper pullback is MU, and it's deeper because they're actually sitting near their 21-day moving average. And as you can see, we did not keep melting below the 21-day moving average. We held as support, we are tightening, and we are doing it on a decrease in volume. The trend has absolutely been immense, and it really hasn't had much of a break when coming out of this key level here visible on the weekly, and that's simply one of the main reasons why key level breakouts are just so powerful. They will last for multiple weeks and multiple days, and that is why we only talk about hot stocks from hot sectors. But is it possible that these stocks can go ahead and break out above their highs? All of them so far have been pulling back from all-time highs, and STX has pulled into its 10-day moving average and has gapped up and has kept it pretty tight near the highs of this day. So opening on Monday, we should be open to the possibility that these stocks can continue to break out because leading stocks from leading sectors do move ferociously and it can happen very quickly. But of course, a pullback to the 21-day moving average would be ideal as it provides much better value, just like MU. So MU certainly needs to be kept on close watch. I want to look at the SMH now. This is the semiconductor ETF, and it has also pulled back into a key level while bouncing with an increase in volume, and the semiconductor sector has been going through a little bit of a rough patch. However, we're seeing a lot of momentum come in at the end of last week. This is TSEM, and it is a few days away from earnings. However, it seems to want to break out from this key level of resistance here. Not really a great buy due to how close we are to earnings. However, it is good to note when a sector begins to move, and that's what we're getting in TSEM. If we do get a breakout, maybe that could signal a potential move for the semiconductor sector. We're now looking at ARM, and ARM has been in an absolute downtrend, and for that reason it hasn't been on the radar. However, we are now breaking out of this downtrend with an increase in volume after earnings. it seems like a very high probability that this breakout is likely to continue, and that's mainly because of this really large candle. That's a massive increase in volume, and it would appear that the last time it had such large volume was probably all the way back here in you could say 6 months ago, since that was 2 earnings calls ago. ARM looks like it's ready to make its way back to the upside, but it is extremely early to call this because we are at resistance. However, the volume here is intense. It cannot be ignored. ARM has to be on the radar. Okay, AMD, it pulls into support and quite a few bounces. If I could grab this arrow here, and we have this major level of support, and we hit it here. We also hit it here, and we're coming into it again. And this time we're getting a little bit of an increase in volume as well. So we're getting that push in volume into the semiconductor sector, but it's really early. We are still coming from the bottom. However, this time we're doing it with volume. That's what's so different this time, and is why I would also like you to pay attention to it as well, because being able to buy during that U-turn creates such great risk reward. But of course, we do have to worry about resistance ahead, and we do have levels such as this resistance level right here, and we also have the declining moving averages. Those are important, so let's note those as well. NVIDIA doing a bit of the same, coming into this support level and pushing with an increase in volume, and look at the size of that candle with that increase in volume. Let's see what happens next week, whether we consolidate and then decide to break out of this resistance level, or if we decide to come back in yet again and test this support area. When volume comes into leading stocks, we certainly want to pay attention. I know I do. Let's look at the cues again before we take off. And by the way, if you haven't hit the like button and if you haven't subscribed yet, go ahead and do so and capture leading moves from leading stocks. And what's really going to help push a lot of these leaders into next week is a support and a move above the resistance in the QQQs. More than 50% of a stock's move is simply based on the general market conditions. And if the market continues to go sideways, a lot of stocks will also continue to go sideways unless you have been able to identify the top 1% leaders, such as data storage. And they can certainly continue to break out with ferocity if we do get this breakout in the Qs. So let's go ahead and pay close attention to those, as AI names continue to be the main driving force behind a lot of the moves in the market today. All right. Peace, everybody.